we are learning about price patterns. In this video, we are going to learn about two price patterns called the channel pattern. First, we will look into descending channel pattern, and this is sort of similar to the previous flag pattern that we had learned. In this pattern, you do not really have a pole, but you have that zone, as in you can call that zone a channel, right? So if you can see, this is a zone and the price keeps moving up and down in that zone itself. And once it breaks that zone, it moves up sharply. The price is expected to move as many points as the length of the channel, as in when it breaks the zone, it would move that many points. And that can be your target. Your target can also be your next resistance. And your stop loss can be 3 to 4% of your capital. Contrary to this pattern, we have another pattern called the ascending channel pattern. Here the prices moves in a channel but in an uptrend fashion, right? If you can see, the prices are going up and down in that particular zone, and once it breaks that zone, the prices are expected to move down sharply. The price is expected to fall as many points as the length of the channel. We will look into an example. This is a chart of Hero MotoCorp. If you can see, the price was moving in an uptrend and it was in this zone itself. Once it broke that zone, the price went down, and if you can see, the price approximately came down as many points, or as many points as the length of the channel, or even if you can see, there is a support here and the price came down exactly till this point. And as this is a monthly chart, you can see the price was around 3,800 and it came down till around 1,600. So this was the channel pattern. I'll come up with more patterns in the upcoming videos. Also, please follow my Instagram handle where you can see the trades that I take, and I also write the explanation on how I took that trade in the description. That's all for this video. Keep watching. Take care.